headlines that we are tracking at this hour, and throughout the day we have been putting spotlight on all those sectors which are positively impacted on account of the trade deal, and another such sector is the chemical sector. And to decode what kind of benefits the sector will enjoy, we now have an independent chemical industry expert, Mr. Ajay Joshi, who is now joining us here on ET Now. Mr. Joshi, afternoon. Thank you so much for joining us here today. Broadly, for the sector as a whole, what kind of benefits do you think will enjoy, and is India now better positioned as compared to its other global peers like China as far as exporting chemical to the US is concerned?
Yes, good noon. I think now India is very well positioned vis-a-vis China. We have considerably lower tariffs than the tariff rates on China. So the true China+1 is finally here for Indian chemical exporters. So a lot of Indian chemical players who have fair share of exports going to the US, whether it is SRF or our flavor and fragrance companies like Gem Aromatics, Privy, or multiple sectors, now we will see a very sharp rebound in volume share gains, margin gains, good pricing, because China factor is totally out of the US market. So I think it's such an amazing deal. And there, I think it's a huge year, and this is going to become a blockbuster year for the Indian chemical sector.
Right, Mr. Joshi, you mentioned how India is going to be a big beneficiary now from the China+1 trade playing out. But what would be your bets? What are the names that you are betting on? And what's going to be the outlook for the overall chemical sector for FY 2027 now going ahead? All right, we seem to have lost Mr. Joshi. We'll connect back with him. But remember, we do have this big trade deal that has come through. And because of this now, India stands to benefit as far as the chemical sector is concerned, because this will play out as far as China+1, strategy is going to play out. And a lot of companies from India are likely to benefit from this. Besides, of course, the textile industry, where we do see stocks like Gokuldas, Welspun Living, Pearl Global that are surging in trade. Besides that, we also have the jewelry, gems and jewelry plays that are, stand to benefit from this. And because remember, India's tariffs are one of the lowest as far as emerging markets are concerned. Now, whether it is Vietnam, whether it's Bangladesh, they all have tariffs of 19%, 20%. But India's tariff now at 18% gives us a big competitive advantage over our competing counterparts as far as emerging markets are concerned. So that opens up, broadens the export market for India as well. Besides that, we did see the market also that was reacting very positively to this news. In fact, we saw a gap up start. Now we have turned very, very sideways though. Right now, we have given up those morning gains. We are down almost 2% from the day's high. As far as Nifty is concerned, we are at 25,737 is where we are perched at. Very sideways. Once we gave up those 2% gains, from the morning's highs, we became very, very sideways. So sideways move is what's coming in on Nifty, and even Nifty Bank has become very sideways and range bound right now. But nonetheless, it's a great day coming in, given the kind of underwhelming response we saw to the budget on Sunday. It's a great day for the market and the treat deal that we have been waiting for. But let's slip into a short break. We'll come back and discuss more on the market. Stay tuned. Welcome back here, tuned into Market Fatafat, and we are discussing the major US-India trade deal that has gone through and the impact it is going to have on the chemical sector. We were joined by Ajay Joshi in the first segment. We lost him, but we have joined him. He's joined us back now. Mr. Joshi, thank you so much for joining us now. Mr. Joshi, the last time we spoke, we were talking about how India is going to be a big beneficiary of the China+1 strategy now. But what are the plays that you are betting on? What are the companies, what are the stocks that would be your pick, and what will be your overall outlook for the chemical sector for FY 27 now that the deal has gone through?
I think it's going to be a blockbuster year, particularly companies that have higher exposure to the US market. Couple of names like UPL. UPL is going to be the biggest beneficiary because everything is working out in their favor with US market now opening up. And from the China side also, the competition intensity is anyway reducing because China is shutting down a lot of capacity in the products where UPL in. So UPL is going to be a big beneficiary. Then we have fluorochemical refrigerant companies. So companies like SRF, Gujarat Fluoro, Navin Fluorine, they are going to have a gala year. The pricing has improved. Plus, with the tariffs going down now, the lowest tariffs are on India, the only Asian supplier for the product segment that these fluorochemical companies are. So SRF, Navin, GFL, they are also going to have amazing time. Third segment would be flavor and fragrance companies. Companies like Gem Aromatics, which have fair share of exposure to the US market, but they were in a very bad phase because the tariffs were so high, they were not able to sell to the US market. Similarly, companies like Privy, all these flavor and fragrance companies are also going to have amazing time this year. So refrigerant, fluorochemicals, flavor and fragrance, and couple of agrochemical players, they are going to have very good time this year.
Okay, so this year is going to be a blockbuster year for the Indian chemical industry. That's the word coming in. But Mr. Joshi, also wanted your thoughts on the deal and the structure of the deal. Of course, we don't have the finer details yet. But any negatives that you've spotted in the deal, which could perhaps be a spoil sport for the entire chemical industry, or any basket of the chemical industry in particular?
See, because as per the tweet that Donald Trump had put out, the tariffs on US products is going to be nil, that is zero, although we do not have the details. But this also means that a lot of cheaper exports coming in from US to the Indian market in product segment like PVC, CPVC. So there it's going to be negative because US is the low cost producer because of their petrochemical capacity. Similarly, in couple of product segments where clean science is, US is again a very big player in HALS, hindered amine stabilizer. So for a couple of Indian players, it is going to be not so good year because the US chemicals will also flood Indian market. So I think product to product, but overall for the chemical segment, it's a positive deal. But yeah, definitely polymers, plastics, couple of players will suffer.
All right, so that's perhaps the negative downside. But going ahead, Mr. Joshi, what is the kind of upside that you're seeing for the couple of names that you mentioned, the chemical plays that stand to benefit with maximum US exposure? What can perhaps be, the incremental, gains on the margins perhaps going forward?
I think for UPL, this is going to be a year of margin recovery and volume recovery. The last 2 years were not good for UPL. Nothing was moving. So it's like a mammoth, it's like an elephant. When elephant even wakes up, you can feel the tremors. So for UPL, it is going to have tremendous margin increase. I'm seeing for a couple of products in glufosinate, mancozeb, I'm seeing 8 to 12% margin increase for UPL going forward. Similarly, for Navin Fluorine in particular, I'm also seeing double-digit margin increase this year, particularly coming in from the US market.
Right, so that's the word coming in on how much impact and how much benefit will the chemical sector enjoy on account of the trade deal. Mr. Joshi, thank you so much for taking your time out and joining us here on ET Now and helping us decode the impact on India's chemical sector. But shifting focus then.